Let's talk markets in the meantime. Earnings season picking up steam this week with more than 50 S&P 500 companies and 5 Dow components set to report results. Joining us right now is Ed Yardeni. He's the president of Yardeni Research. How are you setting yourself up this morning, or maybe even I should have said last week, ahead of everything we've already started to hear on Friday?
Well, to tell you the truth, after hearing that report that you just we all just heard from the Middle East, things look just basically horrible over there. Yet, you know, the market's hanging in there pretty well, and I think that's because we've had several of these crises and conflicts between Israel and Hamas that led to ceasefires pretty quickly. This one looks like it's going to linger, and yet the price of oil hasn't really shot up. But I'm accentuating the positives here in terms of what the market's focusing on. And that's, as you said, it's earnings. I think it's very likely that when all the earnings come in, that the third quarter is going to be at an all-time record high for S&P 500 earnings, which is pretty impressive all in all, since the Godot recession, the most widely anticipated recession of all time, just has been a no-show so far.
So, Ed, though, think about how do you think about those earnings? And I know it's just impossible to put these things together with what's happening in the Middle East and what you think the larger geopolitical implications are, and therefore for the broader market. So we could have amazing earnings, but it's not even just what's happening now. Obviously, stock prices are looking out, call it 12 months, 18 months out. You know, where are we then? And how does this situation factor in? Recognizing, interestingly, at least from the academic studies that I've seen, and just, you know, you look at charts over the years, you know, with the exception of what was taking place in Israel in 1973, for the most part, when there have been problems in the Middle East, they have not impacted the stock market as negatively as you might imagine they would. Correct.
Well, I think the obvious example of when the Middle East really did have a tremendous impact on the global economy and certainly on the stock market was back in the 70s, when we had 2 energy shocks in 1973, and that was related to a war between Israel and the Arab states. And then in 1979, when the Iran Revolution occurred, oil prices soared a lot more than they've increased so far since the summer. And as a result, I think the market is looking over the next 12 months and concluding that this too shall pass. One way or another, the situation will be stabilized. And if that's the case, then the outlook for 2024 is probably pretty good.
Okay, but here's the thing, you know, prior to a week and a half ago, where was it a different debate about not whether things would be, putting what was happening in Israel aside, because it hadn't happened yet. There was just a fundamental debate about whether we were headed towards a recession, how deep the recession would be, and whether, frankly, 2024 or 2025 actually wasn't that it was going to be positive or stable, it was going to be bad. I mean, that was, I think there was a lot of people that were concerned about that.
Sure. Well, look, one of these days a recession is going to happen. The business cycle hasn't been, you know, forever banned. And I do think that the outlook for now is pretty good. I mean, the economy has proven to be remarkably resilient. It's true that we've seen this tremendous increase in short-term rates and the bond yield, and yet the consumer continues to spend. There's still a lot of fiscal policy stimulus in the pipelines. Companies are investing in artificial intelligence and so on. And as you know, we had a really strong GDP during the third quarter, which is why earnings are probably going to be at a record high. So I think the economy has proven that it can actually live with 4.5% to 5% bond yields. Obviously, if we go a lot higher than that, you know, Jamie Dimon of J.P. Morgan has been saying, you know, these are extremely dangerous times, and yet his bank reported tremendous upside surprise earnings in the third quarter.